Hello. Why do they doubt the kid? I'm about to prove them all wrong again. I got a low tolerance, cause they don't even know what the problem is.
Is there more soldiers on the other side of that EMA? Did they go pick up new soldiers? Because, you know, now that it's weak, to kind of give y'all a little background, right? I love trading. I've done trading for a long period of time, and oh, come on, 4:30. Come on. Let's go. Hey, what's going on? Good morning. I've been under the weather, as you know. It's kind of sequence of my videos. And welcome to After the Trades. The goal behind this is to kind of recap, almost like a triage for those that know, and a bit of a journal of what my trades were. I just want to cover, max is going to be probably around the ballpark of 2 to 3, just to kind of give you a little background of everything else. Don't forget to hit the like, subscribe, and the bell button. And I have all my socials right over there. Nope, right over there on that lower corner. So don't forget to take care of your boy when it's all said and done, because the follows really help this channel grow to the size that it is. Congratulations to us. We got to 340 quite a bit a long time ago. Now we got to keep on adding. Let's see if we can get to that 500 very soon. So without further ado, let's go ahead and get into it. So let's start with the media. A couple of trades that I took. These things were kind of interesting. I would say the biggest challenge out of this one was the fact that Jackson Hole, you know, we're coming off of all-time highs. Just everything that can go wrong would have went wrong, and you could kind of see that inside of the market. So a couple one that I'm going to key off on is the 21st, yesterday. I was going to cover what happened on Wednesday, but I was so halfway sick. It wasn't that many trades. I want to key off on what was important, especially like that big one right there. Yeah. So anyways, right there, that futures line, $830 lost in 39 seconds. A little bit of a recovery, a little bit of break even, a little bit there. $15 a little bit later. Trying to be able to scalp and hold, especially when we have open range breakout. And I'm gonna break down how things can turn around on you and why stop losses are important. But anyways, let's go ahead and get right to it. And then over down in the bottom, I got a QQQ option call. You can see that I paid about $86 per contract, and I topped off and sold them for about $112 per contract right then and there. So that's it. We're gonna be breaking down NQ and QQQ and let y'all know how this relatively works. So let's go to the chart. First thing I want to kind of break down on this NQ is that opening range breakout is probably the best way to get a very simplified trade overall, because with opening range breakouts, the gambit is everybody sitting on the sidelines. They're ready to make certain positions, especially the brokers. They have lingering orders that they're being held, or whatever the case may be. And when it's all said and done, they're going to go ahead and execute these orders in a set given time, right? And that's good and dandy, but the biggest thing that you got to understand is there has to be rules no matter what you're trading. If it's opening range breakouts, if it's EMA crossovers, if it's MACD oversold, if it's stochastic oversold, you just need to have rules. And in this one, I would say I had my rules. I kind of bent it, I would say, if anything, I bent the rules, but I don't think I really broke my rules, because I was kind of setting up an option trade and a futures trade at the same time. So without further ado, let's go ahead and look at that opening range. Let me put my stuff to the side because I'm monitoring a trade at the same time. It's doing solid, but I'm waiting for more to come. So the first thing I want to key off on is the fact of the range was set relatively fast, right? We had a nice, like, solid up and down. They did everything. They thought they were going to take it up, then they brought it all the way down. This is what you want to see, a big wide old doji as people are exchanging, their positions. They're like, all right, I think we're bullish. All right, I think I'm bearish. And they kind of do this like neutron dance type of movement. And that's what you want to see. So if we look here, that is exactly what happened. We had a nice little solid push up coming from the open. And then when they got to a certain point, they noticed they couldn't hold it and had to go back and pick up some friends. The funny thing about it, normally when this range is here, normally the stop losses are there and we get the liquidation of all those people coming down to the downside. We didn't get that. We got something a little bit more nuanced, right? Because sometimes we'll get down there and then there is more bears that can't wait to pile on top, and that's what forces price down. And sometimes the new bears that steps in, their stop losses are so tight that they create a massive liquidation pool that if the bulls can just push it just enough, they can create such a domino effect. And I think that's exactly what ended up happening here. So let's go ahead and dissect this a little bit further. If we go into this area right here, you'll see nice and positive move here. We always go down to the 5 minute when we're going for our entry. So the 5 minute gave us a solid close. We're not taking anything serious until here. And here's where everything goes. If you actually watch my BYTT special, there was a point where I'm looking at this and I'm looking at, okay, you know what? I kind of messed up on my trade. I probably should have did better and just took the trade, because as I'm setting things up, my hesitation is probably my downfall, right? And that's exactly what happened. I just said, okay, we got a 5 minute close. It's not too bad. My stop loss will be somewhere around here. But my reaction to jumping into the calculation of what that stop loss would be, I said, okay, you know what? At worst case scenario, we're going to put in a bearish fair value gap. And that did not happen. You can kind of see crossover to the downside right here. We're still in the bearish state. And if you really look at this MACD, we crossed. This is why traders get frustrated, right? But people like me, I'm not frustrated. It just did not work for that. Could I had did like $100? Hindsight can be 20/20. That has nothing to do with it. Will I take the trade exactly the way I traded it before? Absolutely. Would it have generated some results? Absolutely. But at the end of the day, I got to accept the market because the market is king. It decided that at the end of the day, no, JD, we are not done with the upside. We just gave you this cross because we were going to go ahead and bull trap all the bears inside of there, sprung it, and used them as potential fodder, right? And that's exactly what happened here. So as we kind of really dissect this 5 minute close was part of our rules. Get a 5 minute close, look for continuation, maybe like a reversal or whatever based on the time frame, whatever the case may be. But the goal is we want to be able to position ourselves where we are happy with what is presented in front of us, and we just go ahead and conquer from that point on. I'll exit one of my positions. And that way I can concentrate on this video with y'all. That's all. All right. So coming back to this, you'll see that when we had this close below, it did give us a push down. Now, should we had put our stop loss a little bit more into profit after taking that close, I started to see a nice little push to the right direction. And when that push actually happened to the right direction, the first thing that popped in my head was, okay, cool, I just need to wait a couple of minutes. Let 5 minutes go by and then we should be good to go. So I actually was more worried about the time factor versus the actual trade. But when I noticed that we could even put in a fair value gap by failing to hold below this level, I just had to get out the trade. That's the reason why you're seeing in this media screen that I lost about $800 on that trade. Now, you're probably gonna argue like, well, what happened here? Because if we look at that length from here to here, let me slide this over. That length from here to here is about the same length from here to there. And that's right. That's right. It was a 100% complete reversal. So I had $800 in profit just to turn around and lose $800. That happens. And we're talking about a 39-second trade, right? Let me drop this down to even smaller time frames to really hammer this home. Right? Here's the trade. 5-minute close somewhere around this level here, which is that one right there. That was our first test. Came back down, came here. They bought up the dip, and that dip took off and pushed all the way up to that upper register. Back inside of the opening range. Back to push right on through, creating all types of chaos to anyone that thought this thing was going to be bearish. So the first part of this, you're probably going to be like, oh man, they took all my money and I'm upset. And then you're going to throw your hands up in the air. Listen, folks, calm your down. Just relax. It's not that serious. It's serious, but it's not that serious. It is money, right? And I'm not telling you to be numb to it, but I want you to be numb to the fact of run your trade your plan, right? So when I saw this and I was like, they failed to put in a fair value gap with a great opportunity to do so, I said, oh, we have no choice but to go up, right? So when we got up here, to be on the safer side, I took the 5-minute opening range breakout here, right? So this was our solid break here that led to the option trade that we have here, right? And that first part of the trade was a 5-minute close above. That was this. Then I had to wait 5 minutes, roughly 10 minutes. And then when we started to show a little bit of weakness, which I already put my stop loss into the profit, could I have put my stop loss down here? Yeah, but I would be giving up way too much. So I was locking in some profits so I can make sure I protect my stop loss area. And that's what led to this one right here, $86 to 112. I want to say that's closer to 30%. Let me just do the math real quick. Let me get a calculator. 112 divided by divided by 86. Yeah, about 30%, not counting fees. Again, in this game, you want to try to build on top of 10% consistent aggregate. That's what you want to get. You're going to take some risks. You're going to take some losses. You're going to have some points where you're like, why is the market not doing what I expected? But you can't live on that, right? And this was a perfect example of that. If I was so wrapped up on, oh my God, woe is me, I should have been in this trade, blah, 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 and they took my money, they're so mean, and I got stuck in molasses over here, not watching that it's setting up for something even better for me, then we would have a very awkward predicament. The funny thing about it, if we go back over to the media scene, you'll see that I tried to play this back up, but I was a little bit gun shy. I'm not gonna lie, I was a little bit gun shy, and probably what would have been best is if I held on to my futures position by holding on to the let's see, 10, what does that say? 1007, 1008, 1011, 1015, and 1023. So 1023 was me attempting to hold on to that, so that would be from here to here, and then they wicked this down to here around 1025, right? So this one was really shaky, and this one was a little bit sideways. In hindsight, if I had my options already set, maybe I should have just held on to my futures a little bit longer. So what do I take away from this? Well, the first thing is, I think that setting up my options first will probably be the best thing, because it takes so much longer. You got to find the contract, you got to see what type of structure it's setting, how it's going to pan out, and everything else. And if I actually set that up, I probably would have been in this trade on the 5-minute break with my futures after the fact. So let's say a minute or 30 seconds before this candle closes, it's obvious it's going to close above there. Trust the fact that my futures will hold the line. And we kind of tweeze the bottom here, and then we can continue. Maybe I hold on to my futures just a little bit longer. Of course, hindsight is always 20/20. I did lose 185 and 60 around 10:08, which was the completion of this candle here, and then 10:11 was being annoying because I tried to catch the momentum because I felt like we're going to continue. Lots of questions here, but for the most part, I did kind of clean up some of it, and then I cleaned up the rest this morning, and it's just part of the game. It's just part of the game. So that said, that is after the trades. I want to say thank you to each and every one of y'all. It's not the easiest thing for you to become a trader. I know it can be relatively tough for y'all, but the biggest change in what I think I want to come in with my channel is being able to give it to you in multiple perspectives. So if you haven't checked out my BYTTT, every morning I'm going to give y'all as much information as possible. If you haven't been part of my Get Rich and Fit Grind, you can see some live trading that requires for us to just do better. And then, of course, after the trades, it's here to protect you, so that way you don't feel like you're alone. And I look forward to continue to give you great content. Don't forget, I want to say thank you for doing so. That said, I'll see y'all later. Have a great day. Bye-bye.